Did you know that the ultra-rich sometimes pay less in taxes than you? Here's how they do it. The top 1% avoid over $160 billion in taxes every year, and it's not because they're sneaky, it's because they know the rules. While you're filing taxes and crying over your W-2, they're out here buying yachts with tax-free money. So, do you want to learn their playbook? Let's dive into the deliciously legal tax-avoiding secrets of the rich and how you, yes, you, can use some of these too. 15. Borrow against your assets, because why pay taxes? When you can just borrow, rich folks hate selling their stocks because it triggers capital gains tax, so they just borrow against their assets instead. It's called an asset-backed loan. And guess what? Loans aren't income. That's right, zero tax. They use these tax-free loans to buy cars, homes, or even more investments. Ever heard of Elon Musk taking out billions in loans against Tesla stock? Yeah, he's not crazy. He's strategic. 14. Depreciation, the magical disappearing income trick. Real estate investors love this one. A building can increase in value every year, but the IRS lets you pretend it's losing value. That's depreciation, folks. It lets you write off losses even while your property appreciates in real life. Meaning, you make money and lower your taxes. Legendary. 13. Stepped-up basis, the ultimate cheat code for inheriting millions. Here's a fun one. Let's say grandma bought a house in 1980 for $100,000. When she passes it to you, it's worth $1 million. If she gifts it to you while alive, you pay capital gains on that juicy $900,000 profit. But if she passes it to you in her will, the value steps up to $1 million and boom, no tax on gains at all. This is why wealthy families pass down assets, not cash. Think long-term, think legacy, think tax-free inheritance. 12th, turn everyday life into business deductions. Rich people don't pay for their phones, cars, or even vacations. Their businesses do. That fancy dinner might be a business meeting. That Vegas trip was just networking. And their dog? Okay, maybe not. But if it guards the office, then yeah. If you have a legit side hustle, you can start writing off parts of your life too. The trick is documentation. Save those receipts, note who you met, and keep them tight. The IRS doesn't like vague stories, but they love receipts. 11th, Roth accounts, where money grows up tax-free. Want to be rich and untouchable by Uncle Sam? Get into Roth IRAs and Roth 401ks. You pay taxes now, but the money grows and comes out tax-free. Forever. Yes, even the gains. And if you make too much to qualify, the rich use a sneaky trick called a backdoor Roth IRA. Google it. It's 100% legal and way simpler than it sounds. Set it, forget it, retire in style. 10. Donate appreciated stock. Generosity that pays, literally. Here's a rich person move with a halo. Instead of donating cash, they donate stocks that have ballooned in value. They avoid capital gains and get a tax deduction for the full market value. A double whammy. If there's an Apple stock that's skyrocketed, donate it directly. You support a cause and dodge taxes like a philanthropic ninja. Even small investors can use this one because it's not just for billionaires. 9. Donor-advised funds. The VIP lounge of charitable giving, donor-advised funds, DAFs, are like trust funds for generosity. You throw in a chunk of money, get the tax deduction now, and then take your sweet time giving it to charities later. The rich love it because it's flexible and strategic, and it gives them serious tax breaks in high-income years. You don't need a fortune to start. Some platforms let you open a DAF with a few $1,000s. Think about Jeff Bezos. While Amazon generates billions, the company paid almost no taxes for years. How? By strategically leveraging legal structures and tax benefits. This is exactly how many wealthy individuals use trusts and offshore accounts to legally minimize taxes. Hire your kids, family, payroll, baby. Wealthy entrepreneurs often put their kids on the payroll, and it's genius. The kid gets income, usually tax-free under the standard deduction, and the business gets a deduction. Your 13-year-old helps with TikTok? Boom, write them a paycheck. Just make sure the work is real and the pay is reasonable. The IRS has eyes everywhere. 7. Escape state taxes, like a billionaire. Yes, you can too. Why do so many rich people mysteriously love sunshine and palm trees? Well, it's not just for the vibes. States like Florida, Texas, and Nevada have zero income tax, and that's a golden ticket for high earners looking to keep more of their money. Jeff Bezos, Tom Brady, and even Elon Musk have made the move, but not just for the golf courses. If you work remotely or have flexible job options, relocating could actually save you thousands each year. Just make sure you're genuinely living there with a driver's license, voter registration, and actual residency because tax authorities are not easily fooled. You can also keep property in other states as long as your primary domicile is in a tax-free one. Rich folks play that game all day. Why not you? 6. When life gives you losses, write them off. When the stock market dips, wealthy investors don't cry, they celebrate. That red on their screen just turned into a powerful tool called tax loss harvesting. This move lets you sell losing investments to cancel out gains elsewhere, lowering the total taxes you owe. And if your losses are bigger than your gains, you can even deduct up to $3,000 from your regular income. Here's the magic trick. After selling the loser, they buy a similar asset, but not the same one, thanks to the wash sale rule, to keep their portfolio balanced. You don't need a $10 million portfolio to do this either. Even if you're just dabbling in ETFs or crypto, it works the same. So next time your investments tank, ask yourself, is this a tax-saving opportunity in disguise? 5. Life insurance, or a private bank for the rich. Most people think life insurance is for funerals. The rich see it as a wealth-building machine. Permanent life policies like whole life or indexed universal life grow in cash value over time. That cash value is tax-deferred and can be borrowed against tax-free. It's like having your own private ATM that doesn't report to the IRS. They use it to fund businesses, buy property, or just stay liquid without selling investments. And when structured right, it can also transfer wealth to heirs in a tax-efficient way. This isn't some sleazy get-rich-quick play. It's a long-term financial strategy. With the right advisor, even middle-income earners can get in on the action. The key is consistent premiums, proper planning, and patience. 4. 1031 Exchange. Real estate's best-kept, legal secret. Do you want to sell a rental property but hate the idea of handing over 20% in capital gains tax? Get to know the 1031 Exchange, aka the real estate investor's magic wand. It lets you sell one property and buy another without paying taxes, as long as both properties are like-kind and you follow a few specific timelines. So, how do the wealthy use it? They keep trading up. A small rental turns into a multifamily unit, which becomes a commercial plaza. All the while, they're deferring taxes. And when they eventually pass it on to their kids, the tax bill disappears thanks to the stepped-up basis. 3. S-Corp. Because the IRS doesn't need your whole paycheck. If you're self-employed or run a small business, this one's a game changer. Rich business owners often elect S-Corporation status to save big on self-employment taxes. Instead of being taxed on all their profits, they pay themselves a reasonable salary and take the rest as distributions, which skip the self-employment tax. This means you legally pay less to the IRS. It's perfectly allowed and super common among six-figure freelancers, consultants, and entrepreneurs. The catch is that it requires more paperwork, payroll setup, and tax prep. But the savings are potentially thousands per year. If your business is netting over $50,000, it's probably time to ask your accountant the magic question: should I be an S-Corp? Second, every single deduction counts. And rich folks know it. Wealthy people are deduction detectives. If an expense has anything to do with making money, they're finding a way to write it off. The average freelancer or side hustler leaves thousands on the table each year by not tracking expenses. Get organized. Use accounting apps. Save your receipts like your refund depends on it, because it does. 1. Rich people don't file their own taxes, and neither should you. Here's the harsh truth. The most powerful move in tax savings is outsourcing it. Wealthy individuals hire accountants, tax strategists, and financial planners who know how to play the game way better than TurboTax. These professionals design your financial life to be as tax efficient as possible. And no, this doesn't mean you need a $10,000 per year retainer. Plenty of great CPAs offer hourly consultations or affordable annual packages. Even one sit-down can reveal deductions, strategies, and setup tips you'd never uncover alone. So, if spending $500 saves you $5,000, that's a great strategy. Rich people get help for a reason. You should too. The wealthy don't work harder. They work smarter with accountants, tax codes, and loopholes you've probably never heard of until now. And here's the kicker. Most of these strategies are legal and available to you too. You just need to learn the rules of the game. Now that you know these secrets, how will you manage your finances smarter? Let us know your views in the comments, because your money deserves a smarter plan. So, are you ready for the next level? Check out our follow-up, The Secret of Private Equity Deals. You're going to love it. And hey, don't forget to like and subscribe to the channel for more fantastic stuff. See you soon.